Hello and welcome to FX Market Strategy. I hope all of you guys doing great. So please, for the trading courses, you can text me. So for details and stuff. So we do have a technical analysis course. It will include the harmonic trading, elite waves, technical analysis, how to use softwares and stuff. So a lot more. Okay, so it's pretty cool course. So you can text me for details. Okay. So right now we're gonna look at some of the stuff, what's going on in the market. So basically, we do have the gold. Okay, we know the gold has been going up recently, and to understand the gold movement, you need to compare some stuff. So basically, let's take the 1 day right here. We know it's a strong move right here. If we compare this and we put the XY, which is a dollar index, and let's put it in a new band down here. Okay, so basically you can see the relationship. It's inverse relationship. So as the dollar was going up, the gold was coming down. As the dollar started coming down, the gold started going up. So there is inverse relationship between the gold and the oil. Okay, so if we take this, delete it, and we put this here, the XY, right there, but we drop it in the same scale, it will look very clear. Okay, you can see the opposite relationship, and that's daily time frame. What I'm gonna do now, I'm gonna take the gold, I'm gonna flip it. I'm just gonna go Alt I, and that's gonna flip the gold. So this gold is flipped right now. So basically, this is the gold but upside down. So you can see as the dollar index, which is this orange one, as it was going up, the gold was also moving the same direction. Okay. Same direction in the chart right here, but in the reality, it's the opposite direction. Okay, because we have flipped this one upside down. You can see the dollar index started coming down, okay, and the gold is going same direction right here, which in reality is going opposite direction, which is up. Okay, so just to get you the idea of there is a correlation between the gold and the dollar index, but there is another player in the game. So I'm just going to go back. So this is a real chart of the gold. It's still in this up move right here, and you can see this. See this double bottom right here? It has kind of double top, but there is a variation in price here. Okay. What we have, we're just going to remove this one. We have the US 10Y, which is a yield in the 10 years bonds. Okay. And this also has a very strong inverse relationship. You can see here, if we go Alt I, basically, as you see, this is the gold opposite now, gold flip. So when the yields were going up, the gold was going in this one in the same direction, which in reality is the opposite direction. And when the yields start coming down, you see the gold start going up. So I'm flipping the gold back right here. Let's go to the 4-hour time frame. Okay, you can see here. Make this bigger a little bit. You can see and zoom it. I'm just gonna use line chart here, make it easier. Okay. So basically, you can see in this date right here. See right here. See guys. So basically, this orange one is the US 10Y, which is the yields and the bonds of the United States for 10 years. So when it did reach this level, the 1.77 and in March, okay, the gold was bottoming right there. Once this starts to actually drop, okay, and just keep drawing, so the gold keep rising. So if this will continue to drop, the gold will continue to rise. Okay, and the same scenario happened here. When this bottoms right here, see this? So the gold did reach this high. At the same time, the bonds were going really down. Okay, guys, that was like the 0.5 level or so, right here. See this? It did go down to 0.5, the yields in the 10 years bond. So as it drops, the money gets taken away from this and gets bumped to the gold. Okay. And as you can see right here, as the yield in the bond start to actually rise in right here, the gold start to drop in. So there is inverse relationship as well. So basically, the gold is affected by the dollar index and the bonds. Okay, so that's what I want to say. So right here, if we this is the the bonds, okay, you can see this dropped with this double top right here. That was the double bottom in the gold, guys, okay? If you pay attention to this one right here, see this here, when it dropped recently, keep going down, and you see this latest move when the price did go back to the upside, the gold dropped a little bit, okay? So this is everything happened here is opposite in the gold. So basically, if this was gonna hold, because this is kind of support level, okay, at this 1.5, if this is going to hold a little bit and go back up like this, possibly the gold is gonna go up a little bit. I mean, the gold is gonna come down because this is opposite, okay? So if we compare and we put the gold in the same chart right here, okay? So if we see this going up, then the gold is gonna come down. Okay, so this is a trick right here. It's important we see the yield going up, so we can see the gold dropping down a little bit. Okay. The euro dollar is going just to move the same direction. Okay. If the dollar index is going to go upside, then the euro dollar is going to come down. So we may be seeing the euro dollar actually coming down. Okay. If we jump to some crypto right here, I have just bought a chart recently today saying this we can see an up wave in the cryptocurrencies. Okay, so I guess see this level is. I just want to share something really cool with you guys right here. This is nice. Okay, guys, just get ready for something really nice. See this move? Okay, guys. So let's put this like ABC or something. So let's make this wave 1 and 2 and 3. So basically, we want to start the ratio between 1 and 3. Okay, how much is 3 compared to 1? This is impressive. Look at this. It's 161.8 exactly, almost per back. Is not that something really nice? Unbelievable. So if you're able to catch this ratio, which is wave 1 compared to this wave 3, you would expect this, the 161, that was exactly this 30,000 level twice. It did work as also support area, okay? So that's really nice, okay, guys? Okay, guys, really nice. Okay, so just something cool I want to share with you. I put this here today. So basically, if this is like 0, 1, 2, 3, then we have 4, then we have 5, kind of truncated, okay? It's a failure fifth, okay? And if that's like an A, then you get a B close to this, so it's like a flat correction, then you get the C, okay? Either to here or break above here. We may be up to a strong wave up, but it's very important we break above the 45, okay? So don't buy Bitcoin unless we break above 45. As long as it's in this range, you can play the range in a small time frame, but don't hold anything strong. And if this level is broken, guys, we're going down to 17,000. Okay, I'm just giving you all the scenarios, so watch out. If this level is taken, the second level is going to be much deeper down. Okay. So right now we also have a double bottom right here. Okay, this is a very nice strong. So this area is very strong support. Very important we hold this one. Very important, and that's right here. That's this one here. Almost triple bottom right here. Okay. So you guys get to know about this correction wave, okay? Also, I want to share something cool with you guys is timing. Okay, you need to. So we always study this way, right? We make this, and we come say, okay, that's the top right here, and let's make this different. Then this one here, so it did come to this wave down here, okay? Then it did go up to this correction and start dropping here, okay? Then it did come to here. So basically, you want to study the time zones as well. So if you just grab, no, this is this one. This actually could have, because this is low right here. Okay. So we want 2.27. Let's see. Right here, time zones. So basically, that's 100% right here. Okay, and that's your down wave. So what you're studying right now here, that was your down wave. So that's your 100%. Then you've got this. I'm just gonna remove the 161 because it's no use for it now. You've got this move here, almost 127 of the time. Okay, and the price wise, I think was about the 61% level. So right here. That was 61 almost exactly, you know, a little bit above 61, 8. Okay. So basically, we're gonna type it down to make it easy, okay? So that was a correction right here. And this correction was 0.618 price correction. And time correction was 127%. Guys? So this wave did go down, this wave did go up. This point was 61.8 of this wave, but time-wise, it did take a little bit extra. It did take about 27% extra, okay? Then this one did come from here. So from this one right here, we need to compare it to the first one. It did take a little bit less, you know? It's about 80% only or so. It's probably about 8. Let's put this one here, about 0.8. Yeah, so about 0.85 or so. And this dropped 161 of this one. So let's put it again here. So this is 127. Oh, sorry, 161.8. 161.8 price fall, okay, or fall wave compared to wave number one, guys. Okay, not compared to the correction. And time wise is only 0.8 percentage, about 0.85. 8%. So this one did drop right here. Minus 27%. Okay, so this was minus 27%. In 12 days, okay, in 12 days. And this was almost minus 17,000, okay, as value. Okay, 17,000, it makes 27% in 12 days. This one did rise a little bit. We're not going to give too much attention to this one because we know it's 61.8 correction to the upside, and the time it did take 127. So basically 127 of 12 days, you take 100%, which is 12 days, and 27, which is quarter of this, so probably 15 days up. Then after that, it dropped in 85% of the days, which is about 10 days, and 161% of this 17,000, okay, which is probably about 161 is 17 plus 8, probably 26,000 or so. Let's measure it. So this one did drop all the way here, which is minus 28,000 in 12 days. I have to take it here only. And 9 days. So minus 28,800. Let's put minus 29. And that's minus 49%. So it's minus 29K. And was 9 days or 10 days? I think it was 9 days only. 9 days. That was minus 47%. And that's in 10 days. Okay. Let's double check these numbers here. Yeah. It's 9 days, 8 hours. So let's put 10 days minus 28,800. So let's put minus 29. 49%, almost 50%. Unbelievable. That's 49. Okay. Okay. The percentage is going to be higher because you're measuring from a lower price. So the 29, if it's measured from here, is going to give a higher percentage than if it was measured from here. Okay, because it's percentage wise from a lower point. Okay, so basically this is a percentage of the full price, but this is this percentage of the full price, but this number minus 17 is just absolute number. Okay, it's not relative. So that's great. Okay, so basically if we are going to get an up move here, we need to expect what's going to happen. Okay, so this is, if we can't use this for something to help us to predict the future, it's useless, right? Do you guys have any questions so far? Okay, so basically we're gonna measure this from here to have this correction wise. And we'd be expecting the same correction length as this one. So basically we can have this here from this point to this point. That's gonna be our expected correction, plus or minus a little bit. Okay, then we can have this level as correction wise. Okay, we can have this as yellow. Okay, so basically this is going to be the end of the correction. Then if this is going to go back up, then we need to see where it's gonna go. So we gave it some levels right here. So let's have the 628 level. And we have the 100 level. Okay. Then if this is going to take the same time to go up as this did take to go down, simply this time right here, from this level right here. Okay, so simply you would be expecting this price at this time. Okay, here. So Bitcoin possibly could reach this price in this time. So we can delete some stuff so it doesn't confuse you guys here, like this. And this possibly could be the next move. How it's gonna work out possibly, because that's like this, so that's an A, so that's like an A, B, C. So you may get another wave down, then start having a big run wave somewhere here. So guys, so I hope this makes sense. So we can throw some price tags right here. Okay, and that's also the timing right here. So by 15th of June, 17th of June, possibly we can reach here. In one condition, guys, one condition. One condition, not two. Must stay above 30, because if we go below 30, this is not valid at all, and we may go to a much lower price. Okay. Okay, guys, I hope this makes sense. So that's BTC time and price analysis. First, time and okay, time and price. First. So basically, the target is going to be between 48 and 59. Let's take the half point, so 54 by 17th of June. So 54 by 17th of June. Okay. Yes. If this analysis work out to be this, then okay. So I hope this makes sense. Okay, so that was it. You guys know the Bitcoin is moving up. Everything is gonna move up with it. Okay. So if you guys are interested in our trading course, please PM me, text me, and we can talk about details and stuff and fix it. So we cover Elliott waves, harmonic trading, technical analysis, market move, risk on, risk off, risky assets, safe havens, how the market move in different scenarios, how the market behaves in risk on and risk off, how you can spot the best to trade in forex market or crypto against each other. Correlation between forex pairs, correlation between stock market things, the crypto. So you get really good value for the course. Also a lot of technical and practice and trading strategies and softwares. Okay, so it's a full package. So thank you guys for joining me today. It's my pleasure, and I hope the market will go up in the crypto. We don't break below 30. I do also have some investment in the crypto, a little bit down, so I'm waiting a little bit till they pick up like everybody else. So I hope we end up making some good profit out of these ones. Okay, guys. Okay, guys. Thank you. Have a beautiful day. Okay. Goodbye.